Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back to another stream. Hope you're doing well. Happy Monday to you. As you guys know, if you're truly a fan of trading and investing in markets, Mondays always have a little bit of an excitement factor to them, simply because it's like, okay, markets are back. We can get back involved in things, see what's happening out there. As you saw here in the opening, make sure take a second. If you are looking to get funded this year, check out DNA Funded. Promo code A1T20 will get you 20% off. And the link for that is in the chat right now and in the description of this live stream if you're watching back at a later point. As we get started, just let me know real quick. If you are with me live, give people a minute to join. Comment where you're from. What part of the world are you from? North America? What country? South America? Europe? Asia? Let me know where you are tuning into the stream from. Thanks for being here. So the big news over the weekend was, of course, the Moody's stuff, right? Moody's downgraded U.S. debt. And I figured we could have a little bit of a conversation about that and also talk about whether or not that actually is a driver of markets. Are we going to see the dollar continue to push lower here today? Are we going to see stocks give back some of their gains? I want to talk about the debt today. I want to give you my thoughts and opinions on it. And just as we get started, look at this. We got Canada, South Africa, Sweden, Scotland, Afghanistan, Malaysia, Idaho. We got someone from everywhere. New York City, London, England, Slovenia, Israel. Good to have everybody here. Germany, India, South Africa. We got a little bit of everyone all around the globe. Good to have you here. Hope you're doing well. Okay, so the national debt in the United States. First and foremost, we all are aware of that. Like, I'd be shocked if anybody in this room doesn't know that the U.S. debt is ginormous. In fact, you want to see something crazy? Check this out. U.S. debt clock. You guys ever seen this before? This is a live feed of the U.S. national debt. Take a look right here. See that? There it is. 36, almost $37 trillion in national debt. And we're going to talk fundamentals on this and how this impacts everything going on. Interesting, they added this Doge clock. I've not seen that before. Interesting. Anyways, the Doge clock here, Department of Government Efficiency, the real-time savings objective from reducing government waste, fraud, and abuse in federal government agencies. Now, here's the thing, right? This is a problem. This is a huge problem. In fact, throughout history, debt and inflation are like the empire killers. If you study history, if you know your history, you know that to be true. Crippling debt, borrowing, and massive deficits, and these problems, I've heard about this since I was a kid. Clearly they take time because we've been in, massive debt in the United States as long as I can remember. In fact, there was, I think the last time the US balanced its debt is it the 70s or something? It might have been earlier than that. I don't know. Anybody have that stat for us? Let us know. I mean, says the US are in debt. I'm pretty sure you're kidding, because so let me ask you guys, who This number, who are we in debt to? Do you know? Comment it really quick. Let me know. Drop it in the chat if you know. Who does the US owe all this money to? Anybody know? China, says Amin. China, Japan, treasuries, China, mostly China, aliens. It's a good one. Mars. We owe it to Mars, guys. That's why Elon Musk wants to go there so bad. He wants to go to Mars so we can take back all that money we're sending them. So the biggest debt people that we owe debt to in the US. Who is it? Well, it may surprise you that yes, it is China. Yes, it is Japan. Yes, it is Europe. Yes, it is who am I missing? The UK. Who else? Name anybody. That's the point. That's the secret here. Name literally anyone in terms of a group of people, and there's about a 99.99% chance the US government owns money to them. Right? So the point is, everyone. Guess who really has a huge amount? The US Treasury. Wait a second. What? Wait a second. Wait. One of our biggest people that we've lent money to is ourselves. So listen, here's how it works. If you get started with the business opportunity and you recruit 2 friends into the business opportunity and they recruit 2 more friends into the business opportunity, then suddenly we have a triangle. It's not a pyramid scheme. It's just a triangle. Okay. Get it right. Does this scare anybody else? This conversation always makes me uncomfortable. It is a bit of a Ponzi. However, unlike a Ponzi scheme is when it is literally just, it's all fraud. It's all like fake. The reality is the US economy, you can't, before you get all doomsday about the US national debt stuff, let's pause and think about something. The US economy is a real thing. It's a powerful force, right? We have, and it's not just, I know people say, well, yeah, it's a powerful force because we have the biggest military and we bully everyone. That's what, but at the end of the day, where do people want to invest money? The US. We have the best companies. We have Silicon Valley. We produce technology. We are the forefront of AI. We are the banking capital of the world, right? Which is kind of hilarious considering we're in so much debt. My point that I'm trying to get at with this is that, yes, everyone lends money to the US economy and there we have a giant amount of debt, but it's all okay as long as, first of all, we change the direction slowly. We can't just keep going in this direction. You keep going in this direction, the US will blow up. It's mathematically inevitable if we do not change the course of our debt situation. The other problem with this, the bigger the national debt gets, the more it costs for us to administer to that debt. Okay, so if you are somebody, and I know we're going to get into charts in a second, give me a second. If you're lending money out, right? We're the US and we're saying, this guy over here, we're giving him, we're gonna loan to him, and we're gonna lend to him, and we're gonna lend to this group over here. Everybody that we lend money or that lends us money wants it back and more. This is not, that's why people lend money to a government or to anybody. People lend the US money. People want their money back plus interest. That interest payment in the United States is getting ginormous, and it is getting to an unsustainable I mean, it already is at an unsustainable path. You know who, and don't take my word for it, because I'm just a guy on YouTube. Take Jerome Powell's word for it. Dude's a very smart man. Whether you like him or dislike him or whatever, he's a smart dude. He's not a dummy. I mean, some people, I guess, would argue that he is, but I would argue that he's done a pretty decent job and he's a knowledgeable guy. And he actually had the courage to say this in a big interview. He discussed at length that he thinks that we need to address the national debt sooner rather than later, and that it poses a big issue for the United States long term. So Moody's downgraded the US's credit rating. The US's credit rating was superb. Now it's slightly less than superb. Still good. Why? Why is the US easy to lend money to? Like I said, we have the best companies. We have a massive country of talent that gets purged from all the rest of the world. The US population grows largely due to people immigrating to the United States. If you took away immigration into the United States, guess what? We would probably be having a population growth issue like places like Japan and other places, right? Italy and things like that. We grow our economy because people want to come to the United States. They bring their talent. Immigration is a powerful force. It's a good thing. You know, don't let the headlines scare you. Immigration is a great thing, especially when it means talent coming to our country and bolstering up, improving our economy. Those are great things. It's what the American, dream is. Come to this country, bring your skill set, work hard. Again, people will say, oh, the American dream's dead. It's impossible. I would beg to differ. I think it is possible. It's not easy, but anyways, that's beside the point. Credit rating got downgraded, right? Makes people a little cautious about like, okay, well, do I want to lend government money? And if so, if you're going to lend the money to the US government, you know what people are saying? They're saying, okay, we'll lend you money. We'll lend the US national debt money. However, the rate that we want to get paid back, we want more. That's what bond investors in the United States are talking about. You know, I often say that we spend all this time looking at gold and talking about the euro against the dollar and looking at everything else. But at the end of the day, arguably the most important chart that you could possibly look at, in my personal opinion, is the US 10-year Treasury yield chart. Okay? Because this is how much bond investors receive for lending their money to the US government per year. And where that chart is moving, where it is both on this scale and directionally moving, tells you so much about the fundamental story of the market. Look, the national debt is a huge problem. But it's been a huge problem, like I said, since I was a kid. And many of you guys might remember this as, I mean, my dad, we'd sit in the car and talk about this. He would educate me about this when I was 9 years old. And, it is true. We have to change it. However, the caveat here, the reason it's not an outright Ponzi scheme that's just all going to, end horribly, it depends on the U.S. economy. Because if the economy is strong in the United States, then people feel more willing to feel stable about the debt that they're giving, right? If we are talking about, if I told you, hey, let's micro size this for a second. I come to your door and I say, hey, so-and-so, I need to borrow $20,000. Let's just say you had $20,000. Maybe you do, maybe you don't. And I say to you, hey, I need $20,000. Will you lend it to me? And how much will you, what do you want in interest? And you look and you say, well, what questions are you going to ask? Think about it for a second. If I ask to borrow $20,000 from you, what do you ask? You probably ask questions like, how are you going to use this money? You're going to ask me, how soon do you plan on paying this money back? You're going to ask, what's your credit rating? Like we just discussed, the US has a credit rating just like all of us individually do. It asks questions like, what's your income, right? How much are you making? How easy is this loan to repay for you? So the same thing happens on a big scale when we're talking about the US national debt. People say, how's the US economy looking? Well, that's what we do all day long in this show. That's what we talk about day in, day out. We talk about the US economy. And how are things looking? Well, a little bit concerning that we had GDP growth come in less than expected. That's our growth engine, right? If you're lending to a government, to a country, you want to see that their country is growing, right? If a country is shrinking, how do you expect them to pay you back? Of course, this is just one reading, and it can change, and economies don't move like this perfectly, right? They have periods of growth and decline, and growth and decline. And the idea is that a good country, like a good company, like a good individual, should overall trend higher. PMIs were better than expected. So outlook going forward is okay. But the point is that I want to get to is that the US economy is kind of mixed right now. Inflation's coming down. That's great. Inflation coming down is good because what that means is the Fed can cut interest rates, lowering their duties on the debt that they already have. If you lower your borrowing costs, like if you borrow new money at lower rates to administer the old money that you've borrowed at higher interest rates, that reduces your duties or your interest payments. That's what the administration wants to do. So then people say, well, Nick, why doesn't Jerome Powell and team just cut interest rates right now, right? If inflation's here, why aren't they cutting interest rates right now? Well, here's the problem. Do you know that when the Fed began cutting interest rates, do you know what happened in the 10-year yield? You ready? This is a shocker. When the Fed began cutting interest rates last year, the bond market reversed yields. This is before they cut interest rates. Yields started going down. After they cut interest rates, yields started going up. That's not how that's supposed to work. And I'll tell you why. It's concerning. The bond market, the Fed cuts rates. Fed cuts, right? In theory, that should mean yields continue to go lower because the bond market should say, hey, if the Fed's cutting rates, the baseline for how much lending out rates are going out to is going to drop. So everything should drop. Yields in general should be dropping. Why did it rise? The problem is that if the market believes, oh, the Fed is cutting too soon and inflation is not fully gone, if inflation expectations spike, so too does the 10-year yield. Because bond investors say, I'm not buying bonds. If there's going to be a lot of inflation, I don't want some 3%, 3.7%. I want 4%. I want 5%. That's what bond investors said. If inflation's going to be high, I need more on that coupon to make it worth my while. That is what the bond market said. So the bond market said, oh, Powell and team cut interest rates too soon. 10 years goes up. Bonds are boring. They're boring, but they're also the most important market in the whole thing. The whole marketplace. Bond market's the most important, in my opinion. Because the bond market tells you everything about the economy, the Fed, risk concerns. It tells the whole story. It's really powerful. So here's the problem, guys. 10 years still elevated here. The bond market doesn't quite see a huge drop in interest rates coming. So I hope that was helpful. I know we just did a deep dive. I spent, 20 minutes doing that. If that was helpful to you in any way, shape, or form, do me a big favor and just hit the thumbs up button on the stream. I appreciate you listening to me on that. I just know that with the with the credit rating stuff for the United States, I know a lot of people probably had questions about that. And it's not easy, right? That whole conversation, the whole conversation that we just had is pretty high level fundamentals. It is not The 10-year is tricky, even for me. I have to sometimes, well, I mean, not that I'm some genius economist, I'm not, but I know my stuff decently well. And the 10-year is still a challenge for me to think through sometimes. I have to sit there and really think about, okay, what is the bond market telling us here? It does take some practice. It is not an easy thing to just understand right off the bat. The 10-year yield is difficult, but incredibly telling once you understand how to read it. Okay. Anyways, dollar index lower here today. A little bit of concern, like I said, around the whole Moody's situation. I put this in our Telegram channel, which, by the way, completely free to join. If you have not joined the Telegram, if we could drop the link here in the chat, that would be awesome. Take a second. We hit over 40,000 subscribers in the Telegram channel, and I'm very, very grateful to everybody who has joined. I put out a notice here this morning about the dollar index, about this exact subject that we're discussing right now. The Sell America trade revived after the Moody's downgrade. Put out my note here, just my thoughts on the dollar index. If you'd like to get these sent to you each and every day, take a second to join our free Telegram channel. So the dollar index, is it going higher or is it going lower here? Well, my personal bias in the dollar is still pretty neutral. I don't have a strong, decisive thing because, again, I mean, it's in the data here. Inflation data came in soft. That is bearish for the dollar. But then PMIs were strong. That's bullish for the dollar. GDP growth was down for the US. That's negative for the dollar. NFP was better than expected. That's positive for the dollar. Do you get what I'm going at with this? The impact is pretty 50-50. There's a lot of good stuff for the dollar. There's a lot of negative stuff for the dollar at the same time. So that leaves me pretty cautious in terms of making, like, I don't have what I need here to say, I think dollar's going up or I think dollar's going down. It's very mixed at this time. So I'm just going to stay sidelined. Again, any updates that I make to the dollar index, I will share within our free Telegram channel. Like I said, take a second to subscribe to the free Telegram channel if you have not already. Stocks, NASDAQ's lower here this morning. S&P's lower this morning. These are not huge moves, especially considering where we have been seeing, NASDAQ moves down 2% in a day or down 3% in a day. So to have a 1% move lower here today is not too significant. I would actually be more interested in buying the NASDAQ personally if we saw a correction of a couple percent. What is that, a 5% move from the highs? About a 6% move from the highs, 6 to 7% pullback from here. If that were to occur, which it could happen in short order. This market is very volatile. I know it doesn't seem like that because you've had the VIX really dry up, but the VIX can spike very quickly back up. And again, I think that with all these 90-day pauses, all these, that does not mean deals are done. That still means that deals are pending and may be completed. And if they do occur, the market will celebrate that. And if there's pauses on those negotiations, if there is, hey, the negotiations are stalling out, they're not working, we could see prices go lower in the NASDAQ. The market wants deals. If it sees deals, it'll go higher. If it sees stalling on deals, it will go lower. That's the driving kind of force at this time. So my take on this is I would like to see, I think everybody's a little bit euphoric at this moment. I have some data to support that idea. If we go to our market sentiment, go put to call ratio, take a look at this. We can see investors, traders getting a little bit frothy here with our put to call ratio for the first time in many months, actually, getting into extreme greed territory, high call demand, people buying calls a lot more than they are buying puts. People very, very bullish on this market at this time. Calls are popular. Calls are in right now. They were not in over here. Over here, puts were popular. And when it comes to the options world, when it comes to market sentiment, I prefer to try and stay with the unpopular side of things. So right now, I'm not bearish on the indices, but I'm definitely more cautious. So I think that there is room for a couple days down. I think we could see a negative week this week. I'm not betting on that, but I have sold some calls against some of my favorite stocks that I own. So just to give you some examples, I sold calls on my Tesla position, which is it's not really a bearish bet to sell calls, but you cap your upside in exchange for a premium because they're covered calls for me. So I sold covered calls on Tesla, Uber, Delta Airlines, which I also own. What else did I do? NVIDIA. So these were the stocks that I sold covered calls against my positions on Friday and Thursday of last week. So if we move lower here this week, what I'll probably do is if we get a pullback for the next couple of days, I'm probably going to buy back those call options that I shorted and just take a small profit on that. But nothing crazy, just trying to hedge just slightly by selling some covered calls on some existing positions that I have. And I'll watch to see how prices move this week. If we move lower, I'll probably cover those or buy back to close those calls that I sold. Anyways, next up, we'll take a look at gold here. So gold, not willing to bet. It's kind of a similar concept here with gold. I don't really have a strong opinion on gold at this time either. In terms of things that I do have a strong opinion on, let me maybe start there. That might be a little bit more interesting. Gold, I don't, right? So gold, I'm very neutral on gold at this time. We've had some solid U.S. economic data, some of the trade deal stuff. I think you've got a beautiful technical upward trend, but I don't love the fundamentals. So I wouldn't be surprised if gold chops around, if we move sideways. I would be personally surprised if we saw something like this. I think what would have to happen for that would be escalation of some geopolitical event, trade war breakdowns, things like that. That's what I think you'd have to have in order to get gold to rip past 3,500. So I don't really see that happening, and that's not something I'm willing to bet on at this time because, again, the U.S. economy seems to be stabilizing. It's not in an incredible, better than expected on all fronts level, but it's doing pretty okay. And that has cooled off some of the concerns. A lot of people were very concerned about, state of economies, they're going to all collapse and all that. And that really fueled gold higher. So that catalyst kind of drying up a little bit makes things a little bit more cautious. Or not cautious, but less attractive for me on gold. So gold, technical uptrend looks great. I wouldn't be surprised if we continue to respect this general area. However, keep an eye on this area. We are currently sitting at a pretty key level of resistance for like the 4-hour chart traders. If you're watching the 4-hour chart, this level here, right? Depending on how you draw it, you could draw it kind of as a general zone here, right? This was support, held as support, failed, and now testing it as resistance. Does this send us back down to fresh lows on this gold move? We'll see. I don't really have a strong opinion, so I can't really say like, oh yeah, no, I think path of least resistance is up and or down. I just don't have a strong enough opinion. Technicals favor bulls on a bigger term. Short term, bears are still kind of holding this level of resistance. We'll see how that plays out, but I don't trade based off just technicals, so it's not a trade for me. Let's take a look at some of the things that I do like a little bit more. U.S. oil, Bitcoin, NASDAQ. Those are probably right there. Those are probably 3 of my most convicted trade setups. However, the closest to actually being a trade for me would probably be oil. So oil, I am watching very closely to see if we can get some sort of breakaway movement from this downward structure. Technicals, again, favor bears in this case. But if we get a breakout, then I think I would join that move. So I'm watching for this kind of pattern to break out. If we get that, if we get some sign of strength, because I think you're still sitting at resistance here. I think sellers are still holding up pretty well here. And I'm just going to wait for, if it happens, right? If buyers take control, then I'm more interested in something like this. By the way, we will be handing out trials here today in the Telegram channel. If you are not already in the Telegram channel, I mentioned this earlier, but take 2 seconds here to make sure that you join it. We just dropped it in the chat. We'll be sharing some information about how you can try the Edge Finder for 30 days shortly after the stream. But click here to join the free Telegram channel for updates on that. So I do like oil. Like I said, waiting for signs of strength. I think that from a technical basis, like you might have had a double bottom here. This might be your double bottom, but I really only would like that to kind of be, I'd like that to be confirmed with some sort of breakout here. We have a downward structure here. I'd like to see something like that. If that occurs, that right there is very likely a setup for me on the long side. So that is what I'm looking for. Another thing that we can look at is Bitcoin. Bitcoin is another setup for me, but would need a little bit more here, right? So we are seeing a couple interesting things happening. So first of all, we tapped back into that very close to that all-time record high for Bitcoin. And so far, we are seeing a little bit of a rejection on the daily chart. However, what we might be seeing here is the classic kind of cup and handle concept of basically, okay, we got the breakaway move. We've started to trend higher. We've kind of exhausted the run here in the short term, but maybe what we're seeing here is just doubling back, testing support, and moving higher. Kind of your classic cup and handle. So I do like Bitcoin to the long side. I think the risk to reward for me gets really attractive if you get a move back to like the 38.2% retracement. And like I said, I think that move that move could occur in lockstep with a pullback this week in the Nasdaq. If we get that, I'd be really interested in a lot of risk assets. I can't justify chasing the Nasdaq here. I can't justify chasing Bitcoin here. I've got to just see if it wants to come to me. If it comes to me, then I've got some trades that I could put on. But I'm not going to chase this thing. We're sitting just shy of all-time highs. You know, you're talking about from an all-time high, we are only 6% from the highs with Bitcoin, which is not a lot for Bitcoin. So I'd like to see, give me like that flush down lower, and then I'd be more interested, 7-8% lower from here. If we get that, that might be actually a trade setup for me this week or in the next 2 weeks. So Bitcoin's on the watch list as well. I can take a look at, we already talked about it, but I'll just pull up NASDAQ again. Probably would have to be a pullback to this 20,400 to 20,000 level. And it can get there in a hurry. I mean, look how fast we dropped, in this case, 26%, right, or so. This could very quickly do a 6 to 7% snap back here to this level of support. That'd be where I think the risk to reward looks a lot more attractive. U.S. stock market just opened up, however, and you could see out of the gate some strength coming into this chart. There's NASDAQ on a 5-minute chart, looks really strong. Dow Jones showing some relative strength here today, flat on the day. Meanwhile, NASDAQ still down 0.5%. Russell down 0.5% as well. German DAX still hitting those fresh all-time highs or very close to it. This is another one that I like on the long side, but trying to be patient for a pullback on this one. Actually, yeah, DAX is real strong here on the score. Dow Jones is our number one slot. So for Dow, really impressive here in terms of what we've been able to do on the Dow Jones, right? We've been able to break just like the NASDAQ and S&P and really steady, grindy uptrend here since then. This is the nature of indices. It is one of the reasons that a lot of people struggle with them is they drop very quickly and then they grind. And that it can be a challenging pattern to trade, right? Because if you try to get short in the wrong time, you can just get eaten alive. And if you try and get short over here, if you catch the right move, then amazing. But it's very hard because by the time, like a lot of times trying people get short, I mean, literally we saw the put to call ratio during that time skyrocket. People got short at the bottom of the move, right? That's classic, bear market or bull market bottoming is when people get super scared, super bearish at the bottom of the move. We saw that happen. I can show you that. I've showed it many times on this stream, on this channel, but I do want to just consistently remind people, take a look at the S&P 500. What happened in all of that shebang, right? When everybody was scared, look what people did. They went out and they bought puts, which are bearish bets on the market, in massive quantities at quite literally the bottom of the market. At the bottom of the market, the bottom of the sell-off, people were getting the most bearish, picking up the most amount of shorts, getting absolutely pessimistic about the market, quite literally at the bottom of the move. I mean, this is the day that, what do we say? So the absolute April 8th was peak pessimism for the market. Look at where April 8th was. See that? That's April 8th. the bottom. So just be careful. Watch your sentiment indicators. We talk about them often. If you have the Edge Finder, pull up your COT data, see what institutions are doing. Pay close attention to that. Keep an eye on market sentiment. What are investors thinking? If the average Joe is super scared or super bullish, is that a perfect timing indicator to tell you to go the other way? No. Is it worth considering in your analysis? I would argue a giant heck yes, because that has been in my trading journey, my trading experience. Those have been the most profitable trades of my career, have been when people are incredibly scared, but the fundamentals suggest otherwise. And the risk to reward is so attractive that I have to take those trades. Those have been the ones that have gone the most incredibly well. Going into this year, let me brag a little bit more. I know I'm hot off the press with touting my trades this year, but let me just give you one more. Going into this year, right? Everybody was euphoric about stocks. People, and again, it has nothing to do with the politics side, but it kind of does in terms of a sentiment indicator. The election with Trump, people got really excited about how everything is going to be perfect. We've got this pro-business guy, and stocks are going to melt higher every single day. That was the sentiment. I mean, it was very, very optimistic out there. I mean, here is the November 5th day when the announcement was called for Trump. You can see we had a really remarkable move up, almost 10% higher in just a few weeks. That was a huge melt up. Well, sentiment during this time got real frothy, got real bullish all up around here. And the best call of my year so far for 2025 was during this time, I was very cautious on stocks. I actually didn't own a whole lot of stocks. I sold a lot of my stuff. I got called away of stuff, and I just cleared out. What I was super long going into 2025, or at least looking for longs, was gold. And in February, I got very long gold, which sounded late at the time, right? February, we talked about the Edge Finder. I've showed this before. Let me show you. Where did Edge Finder first get bullish, right? Because some of you guys might have remembered the trade that I had on gold. It was my best trade of the year so far. Well, the score for gold went positive, went to bullish territory February 6th of 2025. I'm looking at gold's historical score on the Edge Finder, right? We're looking at Edge Finder. We're looking at the historical score. February 6th is where gold got a positive bullish score on the Edge Finder, popped up in the top setups page, and I started looking for longs. Shortly after, I was able to get that long position. Right around these areas, I started buying gold. And at the time, admittedly, it felt like I was late to the party. Little did I know I was early. I was early to the party, right? I was, well, maybe even just on time. I started buying gold. I bought gold again here. And that contributed to what has been a really good outperformance year for me so far, being cautious when everybody was scared. And then I turned around and started buying stocks pretty aggressively in the sell-off when everybody was fearful. It's almost so simple that it works perfectly. And it doesn't work perfectly every time. But this year has been a really powerful testament to sentiment in my own trading, right? Watch the sentiment. Watch what institutions are doing. Watch what the crowd is doing. Watch the fundamentals. That is the key. Now, sentiment by itself is not always wrong. But when you see, ready? This is the most powerful. This is the secret, right? As if there is a huge secret. When fundamentals suggest one thing and sentiment suggests the opposite, that is the recipe. That is the cookbook for the best slice of cake you ever tasted, or the equivalent of that in markets, which is great trades. In my experience, what happened this year was fundamentals still suggested the U.S. economy is not getting destroyed. People are so worried about trade, and we haven't even gotten any finalization. People freaked out and sold everything. Fundamentals still look good for the U.S. economy, in my view, at this time. Sentiment was in the dumpster. Sentiment was so ugly out there during all this sell-off. People were like, consumer sentiment went into the bin. It went into like multi-year lows. People feeling horrible. People still don't feel amazing, right? And I'm not saying people feel great either. But my point is, when sentiment is super bearish, but the fundamentals suggest otherwise, which is what we talk about every day on this show, fundamentals still looked okay, and sentiment was in the dumpster. That's the recipe. That was the recipe to catch that move. And that was also the recipe to catch this move. Like, it's almost not rocket science. I know it sounds easy with hindsight. It's not easy. And I'm not saying trading is hard as anything. But it's almost as simple sometimes as just saying, look, when the whole crowd is saying something, just be careful, right? So anyways, I hope that was, I'm sharing with you when I say all that, I'm sharing with you what genuinely has helped me to find some of the best trades in my career have been those moments. It's rare, by the way. It's rare for that to occur when sentiment gets incredibly one way and fundamentals suggest the other way. That's where things get so juicy in markets. And if I could only show up in those moments when they get extreme sentiment and fundamentals suggest the otherwise, trading would be easy. The problem is you have to constantly search for those environments, and they're rare to find. But those are the types of moments in markets. That is where you get some great risk reward setups that lead to massive outperformance. Anyways, look at that. NASDAQ recovering its losses here this morning, bouncing back. S&P 500 also back up here a little bit. Silver's down here this morning. Gold was up, now kind of, well, silver's not down, it's just flat. We had some gains overnight, giving those back on silver. Silver has been the biggest disappointment, in my opinion. I've wanted silver to break out and start to lead the metals charge, but just never have. And maybe that's the confirmation that I needed to suggest that, maybe this gold move is just a little bit stretched. You're not seeing silver take over. For metals to really rip higher, I think personally you need to see silver break out. You need that move. You get that move, the metals run is probably healthy. Anyways, guys, we've got our next show starting here in just a second with Ivan, who's going to be joining the call in just a moment. Real quick plug, if you have not already, it's completely free, by the way. Join our Telegram channel. We're posting free charts each and every day, chart markups on US dollar, gold, indices, currency pairs, and of course, like commentary on like what happened over the weekend with the Moody's downgrade and all that stuff. So if you're not in the Telegram channel, take 2 seconds to join it, completely free. We'll also be sharing some information about how you can get a trial to the Edge Finder shortly after the stream ends, if you'd like to explore our tools in their entirety. Okay, coming up in just a second, Ivan is joining the call. Stay tuned. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, we're back with Ivan. What's up, Ivan? How you doing, man?
Why am I so red? What did you do to me?
Why was what? Oh, why are you so red?
Why is my face so red? What did you
Ivan, it's okay. It's gonna be fine, man. Are you upset? What's upsetting you? Oh, that coffee must just be too hot.
I'm hot.
Ivan, what's been going on? What do you? I haven't spoken to you in a minute. What are you watching these days?
Yen move. And this is the bottom on S&P 500. So yeah.
If this is the bottom, man, this has been quite the run to bottom out right here. We've barely even come back, so that's awesome. But maybe you're right. Tell me more about the yen. I saw some of your posts in the Discord. You are bearish Japanese yen, right?
Yep.
Okay. Why so? What's your thoughts on it?
Seasonality. Now it's a bit of seasonality. It's a bit of Bank of Japan not recognizing that they should be hiking interest rates, and us coming out of the tariffs, meaning back to having movements of goods again. So I thought, risk on. Why not? Why not do my favorite thing that I can do? And yeah, trying.
Yeah, and so in terms of obviously when trading currency pairs, you've got two to consider. I saw you putting kind of like a basket together. Do you have some currencies specifically that you like against the Japanese yen more than others?
Can I say what I dislike?
Sure.
Pound yen.
Okay.
It has higher volatility. So in my world, I'm like, okay, what if I just don't trade it, but then I end up trading it anyways? But my data tells me I shouldn't because it always leads to losses. So my favorite is probably Euro yen. It has a lot of volatility, but doesn't hit my stop losses every day.
So you like Euro yen. Do you also like did I see NZD JPY and AUD JPY? Is that right? Are you watching those ones?
Yeah.
Okay. So of actually, here's a question for you. Australian dollar against the yen or NZD JPY? Which one do you like more?
NCD JPY.
Okay, nice. I was going to ask, have you checked out this this feature here? Let me pull this up. The surprise meter that we just recently built. Have you checked this out?
No, I can make one. I can be the surprise meter, but
you are a surprising guy. But check this out. This is really a cool little invention we had. So all this is showing you is it's showing you which currency, which one of their economies, or which one of the associated economies is beating economic expectations across the board. So like if we pull up New Zealand really quick, what's so cool here, and I'm glad that you chose it because it's one that I'm pretty bullish on for this very reason. Most of our impact data here, like GDP growth came in better than forecast. Manufacturing PMIs are up versus the previous. Services PMIs, they missed previous or lower than previous, but then retail sales better. So the overall, when looking at all this data, is New Zealand is getting an 88 rounded to the nearest percent score. So then we can go back to our surprise meter and we can say, what does NZD have? It has an 88% beat rate. So it's just a cool way to say which currencies are like beating their expectations the most in a way that's positive for their currency. And so New Zealand is getting a really strong score here. Australia is also getting a positive one, and then UK getting a positive one as well. And then some of the weaker ones would be the US, Europe's 50-50, Japan, as you've just discussed, missing some expectations, etc. So just thought this might be a cool one for you. All the FX people seem to like this one a lot, and I personally love looking at it.
Okay, I haven't seen before, but I'll enjoy it.
Yeah, check it out. Let us know if you have any ideas on it. But just wanted to share that it's a cool little feature. So you like New Zealand yen? I like that one a lot too. I think that this has more potential upside when we look at these currency pairs. So which one? So you said Euro yen's the one you like the most?
Say again.
Euro yen is the one that you like the most out of the Japanese yen basket?
Yes, sir.
And when you approach this yen short idea, are you long several currency pairs against the Japanese yen right now, or do you just pick Euro yen?
I trade the basket.
Got it.
And the reason for it is I'm horrible at trading anything else. No, it's just that it's when yen moves, all the yen pairs more than anything moves. But also when yen pairs move, they move differently. So I might have a loss on pound yen, So if I put all my money on pound yen or euro yen for that matter, I'm out. So
Yeah.
like, what happened? So I cut my lot sizes. I reduced my risk, and maybe that's a theory that people are not really getting with me. Like, I lose, but I don't lose a lot because I know it's only the first try anyways. But when it goes in my direction, for example, for euro yen today, we have a new higher high, it gets a pullback, I'll put a normal lot size on.
Yeah. Yeah.
And
No, I love
then
that
we
concept.
have real risk on. But
yeah, I was going to ask you more about the basket concept, right? Because when you look at the yen pairs, like if we
yep.
kind of just studied, like for example, dollar yen is down today. So if your whole thesis was short yen by going long dollar yen, the problem is look at what happens here. But then you look at other currency pairs, euro yen's up today. Pound yen's up today. CAD yen's down today. By taking the basket approach, I feel like you spread it out a bit, right?
Average cost or average. Yeah. That's at least my theory. And then I don't know anything better. Maybe I should know things better. Maybe I should be the expert here.
No, I like that. I
But
like that concept a lot. You spread it out so that you're not so, like if your thesis is really about the Japanese yen, then you probably don't want to trade one currency pair, right? If your thesis is really about Japanese yen, you probably want to offset the other currencies by trading multiple at the same time to kind of rule that out. So just something to think about. What about the dollar? How are you feeling about the US dollar right now? Dollar's been big downtrend this year. Do you think it's bottoming out? Do you think it keeps going?
This is where I put down on my tinfoil hat and I find a golden ball. And I'll be surprised that that by what are we now, 100? By July, we should be at 106.
Okay, July. So you're quite bullish on it in that case.
Yeah. Yeah.
All right. What's the thesis here? Give us the bull case for the dollar.
Thank you for asking. So, I believe that the tariffs led to a lot of it led to a lot of shortages, or at least short term. So when those products are reintroduced into US market, there's going to be very few of them. So that leads to short term increase of price. But then also we have had business has had a lot of costs now that is not normal, like holding costs and most likely also shipping costs. So there's a lot of cost that needs to be calculated into the first batch, and then it can reduce because Powell said that tariffs are inflationary. And the only way they can be inflationary is that there's a shortage of products, or two, too much demand for said available products. And also we saw very low CPI, given that was with very high tariffs. So now that tariffs are aka or as good as gone, then what should be the opposite effect? Higher prices.
Yeah, and as you get the trade stuff taking place, if there is, I mean, the U.S. and China negotiations going decently well, meeting in Geneva, shaking hands, agreeing to pause, both bringing down. I mean, those are peaceful steps. Doesn't mean everything is good and all set from here, but that was a major catalyst, I think, for dollar strength. We saw that kind of take place in response. So going from here, we're on pause for a lot of stuff. If you go from pause to deals, I would imagine that would cause dollar upside. I've mentioned that I'm pretty neutral on the dollar. However, I think that the risk, like if you were to ask me, like if you had to take a trade on the dollar right now, I think the risk would be bigger to the upside than to the downside. So basically saying the bigger risk to me would be shorting the dollar here, because if you get a deal announcement, boom, up we go. We've already kind of priced in like trades all sort of screwed up and uncertain and all that. So I think the risk is to the upside. And so if you get deal announcements, then the dollar probably launches higher. People say, hey, the US is still centric to global trade. They're repairing their relations with many other countries. So I think that I don't necessarily know how all that will play out, and maybe trade relations worsen, and we do see dollar retest the lows. However, I think the bigger risk would be a surprise to the upside. So I think that we'll see. And the U.S. economy also doesn't seem to be going into a total recession either, which would cause the dollar to tank. It seems like we've got decent economic data out of the United States. When we look at that market heat map we discussed earlier, it's not perfect for the US dollar at all, but it is definitely not all red either. One of the big things here that kind of has me a little cautious on the US is that we had some really good inflation data, down to 2.3%. However, PMIs, a lot of people counting the US economy out, PMIs suggest strength, NFP suggests strength. So there is some positive and some negatives, I think, but sentiment is still, very bearish on the U.S. dollar. So curious to see where all that goes. Any thoughts on indices? What do you? I know you said let's call another bottom here and rip higher, but do you have any other thoughts on where we go from here on S&P?
Just to follow up a bit more about it, it's in my head is why has dollar been so bearish? Is as I said earlier today in the meeting, I said that investors starting to lose trust, and they are, and the reason why dollar has been so bearish is that money has been, or stocks, money has been going from America over to Europe and UK, and we have, and if that's going to continue, then my dollar bullish theory doesn't really work. But that also sets a bit of a damper to the bullishness in the S&P. So I'm still bullish. I think we're still going to make a all-time high. I was a bit more bullish when we had the announcement of the tariffs being reduced. The reaction hasn't been where I want it to be. I was like green, 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 green. A bit more muted. So I guess there is more risk priced into into the market than I kind of saw coming, and yeah.
Yeah, I think the indices. I would actually not be surprised to see them make another run for the highs. Again, let's think back to when this thing was in free fall. Why was it in free fall? Well, people thought that there was these ultimatums, and there was no possibility that the administration would work with people. That there would be all or nothing tariffs, and we very quickly saw the bond market and the U.S. market freak out in response to this. And I think the administration saw that and said, okay, well, let's try a different approach. Let's be a little bit more, diplomatic with it. And so that has been a cheering response from the stock market. So I think people are saying, well, it doesn't look like we're going to go back and have those lows get taken out because, again, relations are improving. They're not worsening. And so as relations do continue to improve, if they do continue to improve, it would be natural to see the stock market recapture all of its losses from when this whole uncertainty began, because now you have, okay, well, deals are being made and life can go on. And so, we'll have to see. It doesn't mean there's a certainty that we break to massive new highs, but to me, it looks most likely that we will reach a new all-time high by the end of the year, which is kind of crazy at this time. After this sell-off, I would have been shocked to have gotten back, but then things turned around very violently.
As expected, as assumed is maybe more the word, but because for every scream, I can't find the word scream out now. For every time it falls really hard and everyone is scared,
yep, freak out,
it comes around. And even though we're going into our recession fears, or we're going into boom joy, it turns around. And the reason why, and also the reason why my dollar bullish theory has to work out, is the basis that the economy survives.
Yep.
Because if everything crashes, then there is no hope in my theory. So as long as it survives, we don't have too many major changes in the labor market. People still have money. People still have jobs. People still spend. We may go into a recession, but it's not horrible. Then yeah, a stock market in the end is still going to make a higher high. The only way this can kind of turn really bad, really sour, is that we have a disconnect in the financial system,
Mm,
and we don't know that.
sure.
2008, but so far we don't have that.
Yeah, I agree, especially with the comments about the state of the labor market is really critical to the whole story, right? If people are still employed, if people are doing, they have jobs, they can make it through a lot. We saw people relatively stay um, strongly employed even during the 2022 kind of sell off and concerns about inflation. It didn't really result all that inflation. While it was scary and caused prices to hurt people
Mm,
still had jobs, and that's the
mm,
story here. Is if people still have jobs, they can survive things. It might mean tightening your belt a little bit and cutting down on some certain spending, but if people have jobs, they can get through a lot. If people don't have jobs, they cannot get through stuff, and that's where enter into really ugly recession. So the story here is still, in my view as well, intact, as long as people still, and we saw that in the NFP report, we had more jobs created than expected. There was some strong, stats there. We also see unemployment rate in the United States is still at 4.2%, remained unchanged. That is a good figure for employment. 4.2% people are employed. Another thing to think about here, another positive, is while wage growth slowed a little bit here, people are still getting above inflation wage growth, right? That's
mm,
not so bad. I mean, 3.8% wage growth on average is outpacing the 2.3% average rate in increasing prices. So that is healthy for the consumer. So we have seen people are still employed, wage growth remains strong. So this is where, when I piece this together, it's really hard for me to say, oh, dollars going to zero and stocks are going to crater. It's hard for me to, and that was why, Ivan, when we were talking about these, you and I were like looking for a bottom jokingly. We didn't know exactly where it was going to show up, but well, I mean, you might have, but I didn't. But the point is, it was like, okay, people are still employed, people are still getting wage increases. Like, it's not destroying the hard data yet that we study so closely on these streams, and we've done this for years. This is why we look at that stuff, is because that
mm,
stuff tells a really important story. People can freak out about headlines, and if they don't like or do like a certain politician's moves and all that, they can do that all day long, but the hard data really tells an important story.
mm. And this analysis goes for dollar. It goes for S&P. It goes
Mhm.
for bonds. It goes for Nasdaq. It doesn't. There is no major difference in that. And Poppy says that there's a lot of noise around the dollar. Yeah, it's always going to be, and it might even be worse going forward, for all that I know. But I think what we have to do as traders, we need to analyze, and I've always said it, what drives price and what has an economic impact. Some years ago, there was a lot of protests in what was that place called now? I guess South Carolina,
Mhm.
about Black Lives Matters things, and we're like,
Mhm.
we
Mhm.
saw stores being on fire and looted, and there's a lot of unrest socially, and people was losing their business and everything. But economically, for a country, it's not that important, but it's not that big of an impact. But if we have a bank, or if we have, for that matter, a crash in the US 30, if we
Mhm.
have a downgrade of the US debt, as we had with Moody's, that can have a bigger financial implication
Mm.
than social unrest, for that matter. So life still moves on, even though the current president is the president. So we still have to we still do things that we normally do anyways.
Right. No, it is true. And that stuff, the thing is, that's so, as a trader, it can be very difficult, trader or investor. It can be difficult to look past those sorts of things, which feel so emotionally strong, and obviously, everyone has their opinions on these, especially the social issues, and those things are certainly important. But in terms of just purely a market impact, that's where you kind of have to separate sometimes how those sorts of things, those headlines that get everyone's attention, people are sometimes outraged by it. Like, they're mad that they see like all this crazy stuff happening, and yet the stock market goes up or the dollar is like really strong. Like, you have to be able to separate yourself from that and just say, look, it comes down to a couple key metrics that we talk about over and over on this show. Are people employed? Is the consumer spending money? Does the economy look strong going forward? Don't worry about the headlines. Those things, if you want to spend your personal time going through those and having opinions on those, by all means, do your thing. But in terms of trading and investing, leave them to the side. It's better, in my opinion.
Just to show a chart, during doesn't matter this time around. Doesn't really matter. So September
to Ivan.
Oh, I don't. Sorry.
I am so curious. I want to see what you've got here for us.
It's just 2020.
It's 2020 right now. We jumped back in
2025 now.
I don't think so. I think we're back in 2020 right now.
Okay.
All right, let's see your chart.
So the news, for that matter, over here as well, but the news here is there is more lockdowns. There is more lockdowns. There was people being laid off. There also countries closed down their borders. It was crazy. And I think it was by September here, we had Pfizer coming out and say, well, we have a stage 3 in our development of this new vaccine, but we don't know yet. That was the peak of gold. But up until here, this, whatever that is, this 65% gain, we don't know if we're gonna survive. But the market went up 63%. We don't have a cure. We don't know what this is. It's making us all sit inside our rooms and not do anything. We can't see anyone, but the market went up. I'm just saying how sometimes disillusional. And that's what I also said I think it was during the fall in tariffs. I said, technical trading. Don't use your emotions. Don't use what is on the news. It doesn't work.
I
think dollar went lower.
I think that's relevant too now, Ivan, because without getting into the divisiveness of modern day politics too far, I mean, if you think about it, it's just the reality that the current president of the United States, some people really feel strongly on one side or the other, and respect to all opinions here, but in terms of your trading, leave that completely to the side. Because I've seen a lot of people, I'm sure you have too, Ivan, a lot of people in recent years, with the previous president and now the current president, people trade so heavily off their politics, and it really is concerning. Like, if you really dislike or you really like a particular president and that completely skews your objective view of the market and the data that we discuss here, it's going to hurt your performance. Because look, the president is an important, powerful role, but the economy itself is bigger than any one person. Even with all the power that the president and Congress and all that good stuff, there's still just forces. There's other countries at play. There's pandemics that occur. Like, it's bigger than any one person, and the economy is way bigger. There's secular business cycles that go on that go well beyond the president, right? This AI trade, that's not a political, that's bipartisan. Everybody wants the AI trade to keep going. That's a strong catalyst for American, growth and leadership, for the US stock market and all that. So it's just something to think about. Is it doesn't, like, if you could put that in a box and lock it whenever you're trading, that political bias that you might have about something, you'd be better off in trading, I think. I think that goes for everybody listening. And that's something I had to learn the hard way. It's like you can have these very strong opinions, but if you take them with you to the markets, it is dangerous. Like if you believed, in recent times that the market was going to keep crashing because you really disliked what the administration was doing and that was a driving force for you, you missed out on one of the most impressive bounce backs ever. And by the way, goes both ways. If you believed that because the new president was in office, that everything was going to be perfect from here and we're going to have the golden age and no problems are ever going to occur again, you also got slammed on the downside. So it goes both ways. So just be careful with your biases. We all have them. We all are humans, but do your best to just look at the data and build a system that objectively tells you when you should be looking for longs or shorts.
And that's easy to say, but when you look at this top performer, or when I look at least the top performers in their interviews, they're so cold. They're like, "Oh, it's moving," but like also when I look at that chart, for that matter, if I look at Swiss yen for that matter, it doesn't give me any emotions. It doesn't give me anything, because I know very factual that I won't lose everything and all the time and everything. But to be honest with you, I don't have profitability in here, so I don't really care. I don't really bother. I don't spend any emotion on it. But if you give me euro yen and it's turning around, it gives me a reversal like this, and I'm like, it's go time. And then I don't change my risk. I don't change my target. I don't change anything of my parameters. They're all the same as always.
Right.
And I'll continue to do that forever. And that, taking the emotion out of it, is a whole personal journey. Like, you have to really find your inner peace and inner soul that, that's how it's supposed to be.
You do. And that's the thing, Ivan, is you have, like I do, we have our systems in place. These systems will guide you when you do have, like you and I, we're humans. We have emotions, we have feelings about things that are occurring in the world and excitement and concerns and all that stuff. But a system keeps you based to what you're actually supposed to be doing when you are placing trades with your own hard-earned money. So anyways, Ivan, we're out of time. I want to thank you for coming on and hanging out with me. Everybody who's listening right now, make sure to go subscribe to Ivan on his YouTube channel. He also does one-on-one coaching. If that's something that you're looking into or curious about, send him a direct message. If you're in our Discord channel, you can find him in there. You can DM him. You can also find out information by going to his YouTube channel and subscribing and finding him in his socials and stuff like that. But highly recommended. If you're looking for some one-on-one help, Ivan might be right for you. And if nothing else, make sure to subscribe to support his content. Ivan, thank you very much for coming on, man.
Thank you very much for having me.
All right. See ya. Up next, guys, we've got Chris Pulver joining the call. He's going to be taking over here for a little bit, talking about what's going on. Market's rebounding here still. A little bit negative in the pre-market, now kind of spiking up here as markets get started. Are we headed back to highs? That's the question of the day, I suppose. I'd be pretty shocked if we don't even see a pullback and we go right back to highs, but we'll leave that question with Chris Pulver as he comes in just after this quick break. Before we do that, let me just remind you guys, join the Telegram channel. It's completely free to do. We post charts each and every day. We're sharing ideas and analysis in there, completely free to join. Link is being dropped in the chat as we speak. Take a second to do that while we roll this quick break to thank our sponsors. Up next, Chris Pulver.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Hey, everybody. Good morning. Good morning. Just updating a trade for UNH. I got into the trade for a 424 credit. So this is a 165 by 160 ratio spread. Entry was $4.24. Credit closed at $1.21 debit this morning, keeping $3.03 profit per contract. Okay, so that was while the stock was dropping like a rock. Ended up selling some premium on this. So we had some big insider buying last week. So the 270 by 260 ratio spread I'm still hanging on to, but the 165 by 160 was up about 65-70% of max credit. So I'm going to go ahead and just take it. That trade has been in for about a week. So not a bad little flip there for $300 a contract. And the other one I'll hang into to see, is this just overshot and we stabilize, we start working our way back to gap fill, then the 270 by 260 starts to look better. If that's the case, good, because I'll make some money on that one too. The 270 by 260, I went out a little bit further. This one is a July expiration. This one is closed. So this is closed for profit. And I'm still hanging on to the 270 by 260. So I'll do a quick update on that. PayPal took a fresh trade last week. Let's see what else. Johnson & Johnson was a winner last week. Looking to roll some Teslas out by not this Friday, but next Friday. IWM, same thing. Lyft, I'm still hanging onto some shares. We're at $16.90. I'm hoping that Lyft makes a run into the almost $19 to $20 zone. We also have a nice gap fill back here around 22 and change, almost $23. So my chart alarms are set. I do have shares with a break even around $12.29. If we get into, I'd say like 19 to $20 a share, I will start taking some profit on Lyft. I think if I'm willing to wait longer, we could have Lyft, really make a surge into the 20s, maybe fill this gap at nearly $30. That would be a great run. But just in case it's going to be consolidating here, up, down, up, down, up, down. If we go back up to the same levels again, I think around $20, I'd be good letting it go. Okay. Uber making some fresh highs, sold some ratio spread, sold some puts, took a lot of profit on those. Was willing to own it, still am willing to own it, but it's well outside of my range right now. Took profit last week on CB. Johnson & Johnson took a winner on that little downside move. We've got some earnings this week. Thought this is interesting. Market performance after the S&P downgrade on August 5th, 2011. That was the last time the S&P credit was downgraded. What I think is interesting about this, and it may be different this time, simply because we have such an interesting bond and yield market, but the 10-year yield on August 5th when the downgrade happened was 2.56%. Over the next 1, 3, 6, and 12 months, look what happened to the 10-year yield. I do wonder if this was another way to somehow bring yields lower, which I don't know if that's the case because I think yields are pricing in the fact that the U.S. debt is running pretty hot. So I don't know if yields are really going to move like this. However, look at the performance. I read a lot of stuff this weekend that basically anywhere between about a 5 to 10% correction did happen with any type of downgrade. So even that, even a 5 to 10% pullback in the markets is still, in my opinion, a buying opportunity. 1 month after that downgrade, the markets were down. 3 months later, it was up, and up, right? So, I mean, look at where we were. We were post-financial crisis, 2008, 2009's bottom. So, I mean, the markets as a whole were still quite a bit lower on price to earnings. I don't know. I mean, it doesn't look, none of this means anything, but as a comparison, if history rhymes, is this a similar event that causes price action to maybe reflect the same type of thing? Do yields go lower? We'll find out. Will the S&P continue to march higher? We'll find out. I posted a video yesterday. I put this in my trading journal section on the Discord channel, but I'm looking at, any pullback would be welcomed. I hope we have a pullback before we hit all-time highs. I still think there's going to be some gap filling on this recent rally, especially with this U.S. and China gap. So I'm hoping that we have a little bit of respect for the technicals and not to have this market just go without anybody really participating. So I'd love to see a pullback into this area here. and that'd be kind of, pullback level 1. If we pull back a little bit deeper, I'll even give this, the credit of, okay, pullback level 2 and pullback level 3. I'm still a pretty interested buyer in all these spots, right? Pullback level 1, 2, and 3. I'm still interested in positioning for a bullish move. Okay, and remember, we did talk about this. If this was the market making lower highs, higher lows, then I'm still going to be positioned for that. So if we do have pullbacks that I can position for, as long as I'm selling options where that's my line in the sand, I think that's a pretty good probability to generate some income. If I want to position for a bigger picture, then yes, I can buy more shares. I mean, I wouldn't mind buying more shares of SPY at, let's say, 550 or 540, something along those lines. So looking for some pullbacks. Here's Qs. Same thing here. So, gap lower, pushing back up. Let's see how the day finishes. But do we have a gap fill in this area? Do we have a gap fill in this area? Do we have a gap fill in this area? If it's lower highs, higher lows, I'd still like any of these levels. I'd welcome these levels to buy the dip. I think a key level for this week, and I don't know if the market's going to come all the way back down to the 200 moving average, but if you look at those 200 moving averages, this cluster of EMAs that I have in my charts, it may not be this week, but in the next couple of weeks, do the bears come back and test this level at all? They come back and use this dynamic support in any way, shape, or form. Not sure, but we'll keep an eye on it. Okay, I do have a couple trades running on SPX. I want to spot check really quickly. So down and down slightly, but we're getting some red on the price action for the day. So I'm going to keep a close eye on this. I've got take profits already set. See if these can recenter for me. So this is what I'm looking for. The blue line is where I sold my calls this morning above, and then the blue lines where I sold my puts this morning below. And I'd like to see if price can, kind of get back to center just on today's price action. Hopefully that's the case. All right. So we good on those indexes. Qs. Oops, let me go SPX here. SPX for the morning. Qs. Do we have any effort to fill some gaps? The Dow, with UNH coming back a little bit, this is certainly helping. But do we settle back into, these levels here? Do we pull back and find some US-China gap fills? Russell, 207, just kind of stalling at the 200 moving average. Decent amount of resistance at this trend line. If we stall here, do we fade? I mean, I kind of hope that we do. I just want to still sell covered calls. I think as long as we are not doing any damage to this low on the Russell, then should be in some pretty good shape. Okay, volatility index is up a little bit. I mean, one of the, I think I noted, next my phone. Nope, it's gone. I listened to a bunch of podcasts this weekend, and I think this is one of the largest and fastest volatility crushes we have seen in almost 30 years. So from a 60, 60 VIX to 17, that's quite the vol crush. Bond volatility is down a little bit, but bonds are also down. Look at your TLT for today. I mean, we gapped down about 1.5% from the close here. That's not nothing. I mean, that's a gap of 1.7% on bonds. As I mentioned, I mean, we might see some bond levels where the pressure keeps mounting, where they keep pushing bonds lower and lower and lower. Be on the lookout for a squeeze, especially if we see a bit of a downturn in the equities markets. I could see the bond market acting with a little bit of resiliency off these lows. But I think the U.S. bond market is still in some trouble. So anyway, volatility index here. Let's go dollar index. So dollar not having a great day. Here's currency strength. Euro on top, pound on top, Aussie, New Zealand on top, Swiss and yen in the middle, CAD and dollar weaker. Not a ton of volatility on the vertical axis, but euro, that euro dollar move that we traded last week should be in some profit. So up about 56 pips right now. All I'm looking for on the position for my euro dollar is to get back to the highs. So this is entry 1, pending order 2, pending order 3. If we go back to the highs, cancel, and take the profit. That's the plan. So that's what I'm watching for. Currency strength. Fed. If you saw this last week, there was another shift in the Fed where now it's a continued pause through June, about a 92% probability that they don't do anything in June, and then July same thing, mostly a pause. Higher probability is they don't do anything. So nothing in June, nothing in July. Potential first rate cut would be September. So maybe September, maybe December for 2 rate cuts this year. Where does that put us with the yields? Time will tell. Where does that put us with additional inflation data? Time will tell. Is Trump going to continue to, basically try to troll Powell online? Maybe, but I mean, we have to know that the Fed's job is not to be proactive. They've never been proactive. They never will be proactive. Powell's legacy is to probably not let inflation get hyperinflation, right? Let's try not to let hyperinflation happen in the US in 2025 or 2026. I think if they can curb that, great. It might come to the chagrin of growth. I mean, we might stall growth in the U.S. here, but certainly growth will die if we have higher inflation. It is the hidden tax that now everyone feels and everyone's been acknowledging since 2020, and tariffs aren't making things any better. So we'll see. It's not so much like tariffs makes high prices on everything, but it's tariffs disrupt the flows and supply chains, and it's the capital flows that will change the prices. I mean, what we did see very quickly in April was money that's leaving the U.S. going elsewhere. That's why Euro ETFs are doing so well this year. That's why India's doing well. That's why emerging markets are doing well. That's why everything non-U.S. is, what the Asia dollar is doing well, right? So anyway, Fed is not a proactive body. They are a reactive body. What they want to make sure happens is we still have tight enough credit spreads, liquidity, and stability in the markets. And until we see job losses in the U.S., this whole risk of recession stuff is just not happening. So just be mindful of that. Let's go back. So go back to my dollar index here. Dollar index. So to me, this is, if the dollar index breaks and retests the lows, that's why I'm long euro dollar. That would be a trade that I'd be watching for. I'm still prepared for this to, potentially fake out and go higher, hit more resistance on the backside of this trend line, or find this cluster of moving averages around the 100, the 144, and the 200, but still end up having the dollar go lower. So I'm scaling into my euro dollar. I think the trade looks pretty good. I think euro dollar, to me, as long as there's two ways this plays out. Either this is a, high, low, lower, high, lower, low. Okay. And, that could be some type of harmonic pattern like this. You take a big swing, you go high, low, lower, high, lower, low, put in some harmonic trade here, and then see price head back up at least into this area, or hopefully retest the highs. So flip that around, and there's your dollar index. So do we have high to low, 1, 2, 3, something like that, right? We'll find out. We'll see how cooperative this is. So I'm just looking for the dollar index to retest lows. I think that's the difference. Is on the right side of this trend line, looking for confirmation. I'm not getting like aggressively bearish on the dollar. Certainly after this market. I mean, you had a 9+% move in a currency. That's ridiculous, right? This top to bottom was 11% in the dollar, one of the worst starts in 30 years. So you had plenty of opportunity to participate. I mean, that was a nice flag pattern on the dollar. I mean, another pause there for a couple of days when this thing turned with a trend line break, chance to short. I mean, you had opportunities to be short. Now getting reshort, I just think we have to be patient, wait for a bit more confirmation. I think this low is going to be retested. If we go a little bit lower, that's fine. But I'm not getting greedy on, how much lower the dollar is going to go. I think this whole idea is death of the dollar. Nah, I mean, we'll see. It's a pretty big shift. Okay, oil, still range bound. Floor around 65, floor around 55. I think it's still going to stay pretty much range bound. Even if we came back up into here, if we came back into 65 and reject, or come back into the moving averages and reject, I still think this is still making lower highs and using this 200 moving average as a resistance point. So I think oil is at best probably range bound. I just don't like the volatility around it. Natural gas is down. My UNG positions are down. I'm going to start lowering my calls. I think I've got some UNG this week. Let me double check that here. UNG. Yep. So on Wednesday, well, I guess I could just roll this now if I'm up about 100% of the profit. So I'm going to roll this, check my break evens on these. Okay. So could I roll this out another week? So my break even right now is from 5 to 1088. So 5 plus 10.88. So my break even is 1588. So if I sell a 16, 17, $18 call, see what the premium looks like if I were to roll this. So if I rolled this out a couple of days, really? Doesn't seem right. Yeah. Okay. So I think I'm just going to let this one expire. And then if I want to go out a little bit farther, let's go out to the end of the month. I could sell a 17, which my break even at 5 plus 1088, 1588, collect another 30 cents on this, 1558, get it called away for $1.42. I'd like a little bit more premium out of this if I can. Maybe going into maybe this monthly in June. So I don't know. I'll debate whether or not I want to. I'm probably going to lower the strikes a little bit. So the 19 I still get 25 cents for, which isn't bad. So 1558. If I took off 25 cents, 15 and a quarter, get it called away at 19. That's a decent little gain. I'm just not really wanting to ride. I mean, I'm hoping that natural gas is not coming down here to these lows again. I'm hoping that we at least have a higher low forming and we can resume kind of this uptrend. I'm not trying to be perfect on this one. My long side is out to 2027. So I've got plenty of time. I'm just trying to make sure that my cost basis is, not getting too far away from me. So I'll probably end up selling maybe out a month or so and lower my cost basis down to like 1050, maybe a little bit lower. And try to get it called away by, 17, 18, $19, somewhere in there, make $300 on, 10 accounts. So I'll just keep an eye on that one. Gold. I'm going to look for gold to hopefully continue to fall. This might be a really straightforward correction like so, something like that, where even if we go up a little bit, still a lower high, make a lower low, lower high, lower low. My bar count is still something I'm after. So the 144, the 200 bar count, I'm watching closely. And hopefully we still have pullbacks on gold. I like positioning for bigger upside. So if gold, finds my pullback levels, then I will probably be adding some GC exposure and GLD exposure, looking for something to revisit highs, if not go higher. Silver, pretty good support at 29, pretty good support at 26. I don't know if we're going to actually make a run to the south. I think it's just maybe consolidation here. If it chops around, I'd love a nice little surge on silver. Let's break these highs. Let's run to some open space. Bitcoin poked the 107 handle last night, had that chart alarm go off, and it's fading a little bit today. So we'll see, but we're very close to all-time highs on Bitcoin. Again, I'd still like to see some efficiencies tested. So even I don't know. I mean, even as exciting as that might be for all-time highs, I still don't want to see it run, too aggressively. Like when it runs like this, it tends to pull back. So that to me is an inefficiency. That's an inefficiency. I'm hoping that the market can find ways to fill them before we end up going bigger picture up. I still like Bitcoin bullish. I just want to see some pullbacks here, hopefully. I had some cover calls expire last week on IBIT. I'm not really planning on selling. In fact, I don't really want to sell any covered calls on IBIT, but what I'd consider doing is doing some very inexpensive out of the money puts to protect my overall Bitcoin position. So that's likely going to be my play, is sell something like dirt cheap like this, like an out of the money put that I'll look at it right now. If I sold a $45 put on IBIT, let me take a look at this. IBIT, if I went out to the end of the year, okay, and I sold a put here for, $1.79, it's like, that's not going to break the bank. And it's a 12 delta. If we make a run down to that 179 can probably pay. So from a $59 move, sell a 40, that'd be a $19 move roughly. So $19 at a 12 delta is 228 on top of those. So I could turn this into like 100+% profit if I needed it. Obviously when volatility goes higher, it's very possible that becomes 150 to 200% plus gain. That helps me lower the cost basis on my shares. So it's doable, and I'd rather do that than trying to sell calls. And if I sell calls on my position and price goes here and here and here and here and here, it's like I want Bitcoin appreciation, right? I want price appreciation, not so much an income. If I, buy shares and sell calls against it to lower my cost basis, that's okay, but that'd be like very near term. Do that in a week or 2 weeks and try not to get it called away. But I want Bitcoin to appreciate. So that's where we're at. I hope we have a bit of a pullback. That's all I'm saying. Pull back into, maybe a 98,000. I'll pull back into this area in the 92 to 88,000, and I'd be looking to add some more exposure. MicroStrategy still hanging out above $400. Instead of Charlo, I'm here at the recent highs. Edit this one back to highs. So if this stays above 390 for me, then that's an 1150 winner. I paid $3.30 for that debit. If we're hanging out above 390 by the end of the year, there's a good chance that will pay me over $1,000, and I've got that on like 10 accounts, so not bad. On top of that, this will be an income flip for me. Expirations out to the end of June. 252 is my break even. I'm clearly in the money on my break even. I'm clearly in the money on my 310 covered call. I will let all of that time come out of it, and as we get close to expiration, I'm just going to roll this. It's going to be virtually impossible for me to roll the 310 up high enough to get this thing called away at a $400 sell call. So what I'll do instead is I'll use the 310, pull out all of the extrinsic value, let the time pass, and just keep rolling and rolling and rolling. Even if it's an extra $2 to $3 a week, it's better than nothing. So, but I'm gonna have to, wait obviously until towards the end of June on that trade. Coinbase has had a big pop with the announcement that they're entering into the S&P 500. So you continue to see some more flows in Coinbase. Ethereum broke the trend line. I talked about this one last week. If you're looking to buy this, not a bad spot to buy it, targeting these recent highs. So area 1, area 2, if you like Ethereum. So, buy the confirmation and then position for a swing, right? Confirmation at 0.1, swing level at 0.2, stop area could be below, and you're looking for upside. So that could be some reward to risk. That's pretty good. It's a catch-up trade. I don't like Ethereum as much as I like Bitcoin, but it's still a good-looking trade. Kind of a household name in the crypto space. This is a kind of a lottery play on copper. I don't think it's in profit or anything like that. Not yet. That took this trade out for like 45 days. So copper, yeah, it's down $12. I mean, my risk on this trade is like $90 max for a big payout, but it's got to stay within these 3 lines. Japanese yen is up a little bit. Nikkei is down slightly. Japanese yen down a little bit. EWJ I wouldn't mind seeing some fresh highs in EWJ. That's the thing. DAX stalled for a couple of days, but still at some fresh high levels. FEZ is actually higher, which is interesting. FTSE maybe heading back up to all-time highs. Argentina making a rip to the upside. China still sideways. Brazil looking better. Latin America and Brazil both looking pretty good. MAGs right at the trendline resistance, right at this like 618, 70% zone. Maybe a wedge, right? If we don't make higher highs on MAGs, let's say we pull back and we fill this gap. That to me is kind of a wedge play. I just did gold. I'm looking for gold to still pull back a little bit deeper. I'd like to see a pullback into like 3,000 to 2,800 before I start looking to get long gold. I know that's not a popular opinion when everybody wants to buy gold. I still think this is just an overcooked bull market where we are going to have a pullback. We had a big stretch away move from the 200 moving average. This was moving more on safe haven flows. Well, clearly the markets have responded nicely. The lows of April 7, I mean, we've seen 20+% movement in the U.S. indexes off the lows. It's not nearly as risk off as it once was. So I think that's where gold is at least topped out a little bit. So I'm hoping I can get positioned here. This also would coincide with if the dollar pulls back a little bit and then the dollar gets a pullback and then gets weaker again, well, then positioning on gold would be pretty nice. Right? So I'm just looking at just simple technicals here on gold. What else? Mag 7. I'll look at some mags. I'm selling some premium on Apple. Amazon, I still have shares covered at 225. Broadcom, crazy big run. This thing is up. Wow, that's crazy. It's up. Right now it's up about 60% from those lows. Google, good resiliency off that 150 handle. Meta, it's okay. It's an expensive stock, so I'm not doing much with Meta outside of what I did earlier, which was we were down below the 200. I did some 111s and income trades, and they worked out fine. At this point, I'm just going to hold off, and it's just too expensive. The volatility is too low for me to get the premium that I want. Microsoft, I still have shares. All these income trades here worked out nicely. Netflix, just off of recent highs. Nvidia has had a nice little comeback trade. We're back above the 200 moving average. So as long as Nvidia, I'd say, stay above 120. Heck, if Nvidia comes back up to highs again, that's great. My collar trade, I'll flip this as a, protect the downside, sell some premium on the upside, let it get called away at 130. So if we're greater than 130, I get it called away. Let me check and see what time that is this summer. So Nvidia, let's see, naked put up about 70%, collar trade. So this is out to July. So if it gets called away in July, I'll let all the time come out of that trade. I pulled in $2.60. I'll just add some more covered calls to it if we're trading near highs at 145 and 150. Naked put there. I'll let those naked puts continue to increase in profit. So that's the play on NVIDIA for right now. Do we get back to highs? Let's set chart while I'm here at 150. Tesla 338. Pullback would be fine. I'm still just going to sell covered calls. 257.50, 255, 277.50s. I'm selling in the money covered calls. My expiration's out to the 30th of this month. Berkshire, no trade. Bonds, like I said, bonds are down. Yields. Let's see here. 3-month yield is around 4.35. The 10-year yield pokes some fresh highs. 20-year yield, we're poking that 5% again. I wouldn't be surprised to see if this holds and the yields come down. Expect the bond market to bounce off those lows a little bit. So I could see a little bit of pressure in equities to push equities slightly lower, to see a little bit of relief in the yields to come down, which means bonds have to go up. So let's see if that plays out. I think this was a key level. When the 20-year snapped all the way back up here to 5%, that was Trump's 90-day pause. I do think that the administration is watching these levels. I don't think anything good's going to happen if the 20-year drifts higher. I don't think anything good's going to happen if the 10-year drifts higher. The Fed could cut rates, but these yields may not reflect that. And that's all that's it's not like the stock market has to implode because of that, but it would be a realistic measurement of why growth would stall. You can't have valuations that stay this high. It's a bit of a concern. I think it just slows growth. I mean, it doesn't have to break it; it just has to slow it. So we'll see if this 20-year of 5% means anything. Mortgage rates, average mortgage rates around 6.81 for the that's the average 30-year right now. Credit spreads have tightened back up since the April 7th bottom. Initial jobless claims, this is some of the big data we need to be watching. It's boring, but watch it. Okay. Everyone's talking about recession. There's no recession, right? There's no recession unless this goes higher. If you have a job and you can find a job, there's no recession. So does this look different in the next 3 to 5 years? Yeah, maybe. If this whole push into AI and more productivity, more deflationary pressures with emerging tech and evolution, then yeah, this gets to be a problem. But right now, it's like jobless claims are pretty steady, right? Unemployment rate is pretty steady. Here's continued jobless claims, same thing. If these aren't trending higher, then the recession talk is just not happening. Okay, so we'll see. Let's go China for a second. So HSI, fine. I mean, this is my China basket. Alibaba, Baidu, KWeb, FXI, and JD. CQs, sideways, but kind of range bound. Kind of range bound from here. Trend line. Lisa Sell may go away. I mean, it's more of a adage. There's not really a ton of truth to it. If you look at the comparison between a October to April versus May to September, it's not really May that's the bad performer. It's more like August, September are the pullback months. So historically, that's your pullback would be August, September. But sell in May, it's not really been much of a reason to sell. I mean, we've seen a lot of these pre-summer pushes that go from, May still rallies, June still rallies, July still rallies, August, September is usually this pivot in the markets where we have some pullbacks. So I don't really adhere to that saying. I just think that, look, if you're looking for opportunities, if we have a pullback in May, if we have a pullback in June, then you just treat it the same way. It's a pullback and it's an opportunity, right? Okay, Alibaba pulling back, but still pretty well supported. Baidu. This one, I'm debating on selling covered calls. I think that there is some good potential growth to the upside. What I might do on this one this week is put in a protective put, like an out of the money protective put, just in case earnings is a disappointment. We have earnings this week on Wednesday. So for my shares of Baidu, which I have some, Baidu is right here. Hello, Baidu right here. So I have some shares. A protective put. It would just be something to lower my cost basis. What I don't want to do is I don't want to cover the upside here, because if we get a positive move that has some momentum, it's going to move faster than what my covered call is going to be, sold for. So if we get a quick upside move in the next maybe 30 days towards this 105 handle, I'd rather not choke that growth off and let price appreciate. But if we have something very cheap, like, hey, I'll buy a 77.50 put, and if it immediately drops, then that could be helping me, it lower my cost basis and help take some profit on a put. So I'll look at that this week. Let me go here for Baidu. Put for earnings. Okay. FXI still hanging in there. I have some shares of FXI. Just look to see if we get back to the highs. KWeb. I dumped the shares on this first run in September. JD trading down at 33. This one, I had a cover call at 40. My break even is around 34.77. I might be a bit more aggressive, let it get called away. I've got 1,500 shares of this, so I don't need to make an arm and a leg on dollars per share. But I mean, we did make a spike up here to 38. I'm going to look at adding another covered call this week. So JD, add a covered call. Okay. So I'll watch for Schwab dividend, still recovering. Schwab growth, recovering nicely. This looks almost exactly like the QQQ. Stocks above the 50-day. You know, this market breadth indicator, we're piling up here. I mean, is there more? This could be the idea of this is like the opposite pain trade, right? Pain trade here was everything was down. Pain trade here is everything gets up to this level where like 90+% of stocks are above the 50-day. Excuse me. That could be at least a timing indicator to pull this market back slightly. How many stocks in the NASDAQ? I mean, the stocks right now in the NASDAQ, 82% of stocks in the NASDAQ are above the 50-day moving average. We are now at 50, almost 55% of stocks above the 200-day moving average. So, you know, market breadth right now is still making a charge to the upside. Not something I want to fight necessarily. I'm just looking to buy dips, pullbacks and dips. Pullbacks and dips would be nice. Costco, Walmart, Nike, Home Depot has earnings this week. Lowe's has earnings this week. 25th. No, that's next week. MasterCard, all-time highs. Visa, all-time highs. Amex, not quite. These trades are closed out for profit. Johnson & Johnson, healthcare made a nicer recovery last week. Almost at highs with Progressive Insurance. Took profit last week on CB. Palantir, again, best performing stock of 2024. Any type of dips and pullbacks would be great. I mean, I'm thinking this is volatile enough. Watch a trend line here. I'd love. I mean, this might be asking for a lot, but I'd love to see some type of pullback towards my dynamic moving averages. This has covered so much ground in so little time that I mean, if we pull back anywhere in here, I just want to be a buyer of Palantir on dips. Maybe just start out with option trades. You know, I have this ratio spread that's going to be mostly in profit. So I think that's still doing pretty well, actually. Palantir is here. So ratio spread 252 max. I'm up about 38%. This should make me about $500. So $500, $500, $500, $500. How many accounts? Pretty much all of them. So if that is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, that's $5,000 on Palantir without ever owning the stock. I just put in a ratio spread at levels like, yeah, I would own it down here at $50. You know, we'll see what happens. But if we get a pullback into this 100, 144, 200 moving average, I wouldn't mind, you know, scooping up some shares and hopefully adding some more, you know, option trades. Carvana, I mean, you had a chance to play around the 200 moving average. It's ripped obviously from the upside. Anything else? Redfin, Zillow, Uber, fresh highs. Lyft is what I'm running with as a bit of a value play. I sold a lot of premium on Uber. Bit more expensive. Lyft is a little bit cheaper. Hopefully this one heads higher. Sector-wise, sector performance for 2025 has been pretty interesting. Let's go year to date. So we got the S&P that's basically flat, you know, 1.3% after all the drama that we've seen in the last couple months. Communication services, which remember how it's weighted, right? Google, big part of that. Google is still down for the year, but flat. I mean, Google's flat. Netflix, all time. How is Netflix? Like year to date performance on Netflix, wouldn't it be positive? It's got to be positive. What the heck? Netflix 12 months. Yeah, man, the hell. This thing's way more positive. I guess it doesn't show year to date, but you know, Google for the year down, Netflix up, Charter, Disney. Anyway, AT&T's been a pretty good play for me this year, but 5% of communication services. Staples up, discretionary down. Discretionary is not down nearly as badly. Financials doing well. Industrials doing very well. This is pretty boring stuff, but GE Aerospace. I mean, you throw industrials holdings with Uber. I mean, Uber's a great performer this year, and probably a big reason that this sector is doing well. It's an interesting mix here. You put Uber in the same company as Caterpillar and Boeing. Boeing's obviously up too. Kind of crazy. Like, I would never thought Uber would be in the same space as these companies here, but it is what it is. So that's probably a big contributor to why industrials are up. Materials up, real estate up. I mean, so sectors are starting to perform better. And then tech, I wouldn't be surprised if tech continues to mount a comeback where, if we do have a healthy bull market and margins look good, that tech will continue to do okay. So one more thing here, I think on my, let me go SPX. Let me take a trade on SPX if I can. Current price. Let's see here. Gap fill around 60. Ugh, just so ugly. Butterflies are garbage. Put side's garbage. Premiums are just not that great. Lows today at 58.95. Not bad. Look at a butterfly put fly this morning. What can I get for this? $58.94 with the lows. $20s. Ugh, no thanks. Anyway, I was looking to see if I can just sprinkle in another trade or so. My call side is being threatened on the SPX trades for this morning, so I need to see price hopefully head back down to like 59.25, 59.20 would be nice. It's just not there yet. All right, anyway, that's sector performance. Let's keep going. Let's get to some currencies. There we go. What's up, dude? NVIDIA 134. Selling calls on Tesla, bonds down, TLT. This will be an interesting week. If we are, at support on TLT and this goes higher, I'd like to think that TLT going up means that equities come down a little bit. We still have that huge gap fill from US and China. Currencies, we did China, we did market breadth, we did stocks. Let's go currencies. Okay. I'm still looking for a pullback on Aussie CAD. I might not get it, but I'm just going to hold this thing longer up to 93.50. Aussie Swiss, kind of the same thing, being patient. If this is a swing trade and then a pullback, I'm looking for that three-wave move. So I'll take some profit probably at this cluster. So this will be up maybe another 200 pips or so. Take some profit here around 55 and change, and then add in some pullbacks. Look for a three-wave move into the 5800 handle. Aussie yen. I mean, if we have more risk on trading, maybe this is the backside of the trend, but I think I'm going to sit this one out. I mean, that was the spot to buy. You participate in the bottom, take some profit. Aussie New Zealand still long. Aussie dollar. I hate buying this thing at this price. So I mean, if you're buying it here, you got to be patient to buy it lower as well. Area 1, area 2, stop loss below. This could come all the way back down to like 6,100. Maybe even 6,000 again, but it's like as long as we don't invalidate the lows here with that April 7 low, then I still like Aussie dollar long. I just don't like buying it at 64.50. I think it's fair to say like we have open space, but I would hate to see this currency move without really giving us a pullback. CAD Swiss, still looking to see if I can carve out a bottoming formation. Maybe it just needs to be wait for that trend line to break. It's not there yet. So I'm still in. I'm in a bunch of positions on CAD Swiss, but as far as, adding more to it, I want to see, do we, carve out the right-hand side of the trend line, get up to this level, pull back, and then have a three-wave swing? That's what I'll be watching for. CAD yen. You had your opportunity to buy it nice and low. I'd say out of that trade in these moving averages. Swiss yen, no trade. Euro Aussie, didn't get the pullback that I wanted. Euro CAD, still stubborn, but I still like, coming back to like 54. Euro Swiss, hanging in there off the lows. I'm looking to see if we get back to 96. Euro pound, reset that entire spike on the euro. Euro yen, no trade. Euro New Zealand, no trade. Euro dollar, I'm long. Looking to see if we get back to the highs. If we hit 1500, okay, 1500 to 1550, I'm out. That would be a profit trade. Cancel, and that's it. So this is a trade that hopefully is up around, I don't know, about just shy of 400 pips if I get there. Pound Aussie, no trade. Pound CAD, no trade. If we have rejection here, if Pound CAD rejects in this area, maybe a sell stop, but don't love that trade necessarily. So probably going to stay out of that one for now until I find something better. Pound Swiss, I still like the long trade on Pound Swiss. Fill that pocket, buying some dips. If we have better dips, I talked about this before. If you're buying here, also be willing to buy here and here. So space out that risk. If it goes up to hit your profit target, that's the high probability trade in my opinion. Pound yen, no trade unless you're a scalper. Pound New Zealand, I guess we're getting a pullback here. Is this the pullback on the Pound New Zealand? Maybe. If you're a swing trader, this might be a good opportunity to look for like a 618 swing. So look at your 618 pullback, try to get a swing back down, stop loss above the highs. See how it plays out. Pound dollar, I need to see a pullback. This thing ran from 21 to 3,400. This last move especially, I like the euro dollar better. I think it's a cleaner looking trade. So I don't really love the pound dollar. If you look left on the chart, there's room. This could be a low. This could be another continuation pattern where if we get a pullback here, a higher low, it's like pound dollar could be back up to 4,200. Maybe, but I think that's going to be dependent on the dollar getting weaker. New Zealand CAD, I'm still holding long. I want to see a dip and a pullback on Aussie CAD and New Zealand. We're not getting either one yet. New Zealand Swiss, same thing. This might just kind of grind its way up into the 200 moving average. So just a slow grind. We get a pullback there. Hopefully a three-wave move. New Zealand yen, equal lows to the 200 moving average. New Zealand dollar, same thing. If you buy this, I think you got to be prepared to add another position or so down here. Stop loss below the low. It's open space. It looks pretty good. But I would say small trade. Give yourself some, reward to risk that is favorable. Okay. Also, like if you're long Aussie dollar, New Zealand dollar, you're also playing a bet on China. Like I think that's where a lot of the gains would come from. Is that China's growing, equity markets in China responding and doing well. I think that's where Australia and New Zealand look good, especially if you have risk appetite. Dollar CAD, I don't like this one at all. Dollar Swiss, haven't put in a low yet. Kind of watching this carefully to see if we come back to this cluster around 88. Dollar yen, this is the big rejection point around 148, 149. Just watch this level. Watch the lows here at 140. So we could have higher lows. This could be just a chop fest in here for a while. So as always, like yen pairs can be tricky. All right. I think that's going to do it for today. Anything else for me? Any other charts? We've done, top down. Let's keep an eye on everything. Of course, Moody's downgrade, does it actually mean anything? Is the market more inclined to go, obviously the market ripped back up to these levels. We're stalling today. I'd love to see this. I'd love to see a little pause and then a little retracement and get back to center today. Hopefully that is the case. A bit of a reality check would be nice, but pretty interesting move right out of the gates today. Why do your buy stops not have stop losses? Because I don't use them. I trade small enough where I don't use them. My stop losses are percentages and dollar based. So, the thing I hate the most in Forex, and I'm sure you've all experienced it, same thing in the futures market, is if I'm placing a trade, okay, let's say I'm looking for a pullback here. If I place a trade here with a stop loss below, how many of you have seen price do this? Poke and then go your way, right? Or you put a stop loss and here's your turn and you put a stop loss right there and it goes poke, 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 and then it goes your way. It's the most frustrating thing. So what's the lesson? Trade smaller, give yourself more breathing room. You know, give price a chance to go your way. So that's my style. I don't like to use stop losses, but I trade extremely small, so my dollars and percentages are always pretty manageable. And I'm always looking at bigger time frames. And if I am using stop losses, typically it's an inserted trailing stop loss when I'm already in profit. And then I start using trailing stop losses because that way it's like, okay, let's lock it in. Price is good enough, 80+% of my target, 90+% of my target, then I use trailing stop losses. That's the style. Let's see here. Looks like we'll stand by for news confirmation. I mean, maybe. We don't have a ton of news this week. So we have inflation data. We have PMI numbers this week. If we go high impact only. So here's, Australia's going to cut rates by 25 basis points. CPI data out of Canada and UK. PMI numbers on Thursday for the US and the Eurozone, including the UK. Retail sales out of Canada Friday. So pretty light for the US this week. Anything for the last week. RBNZ, I'm not sure if they're cutting rates. They could be. Mini minutes on Wednesday the 28th. We should have core PCE. Yep. So Friday the 30th, we have core PCE. We'll see. I'm looking for the year-over-year print. Do I trade crypto? I trade Bitcoin. I traded a lot of crypto back in 2016. I was in Ripple, Bitcoin, Ethereum. When it got really popular, I was in, Solana, Litecoin, Batcoin, Gemini, stuff like that. I never got into Doge or Shiba. I didn't give a crap about that stuff. Now I'm pretty much exclusive Bitcoin. So, yeah, Bitcoin is pretty much my play. And it's, I don't really trade it. It's more of like an asymmetry investment. I think that Bitcoin has a lot of upside potential. So I use options now that we have approved ETFs. I trade IBIT quite a bit. I still have my, off-grid wallets and things like that. I do some dollar cost averaging with River. Still have a Coinbase wallet. So yeah, Bitcoin's my main. Okay, I'll let you go for today. Good stuff. We'll see you mañana. Thanks, everybody. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.